Okay. So the goal today was for us to go through the recent history of the crypto industry so we can understand what was happening back then and what is happening now. Sometimes having a bit of breathing room between historical events or between epic news like the crypto industry crashing, us entering into a crypto winter, the FTX collapse, and all of those things can be pretty dramatic. But it's our time to look back and see what things were happening and how things are now. Are we still in a crypto winter? And how is crypto likely to proceed going forward? We're going to start by talking about 2019 to 2021. This was when crypto hit popular consciousness, and everyone was talking about Bitcoin. Your mama and your grandma were also talking about Bitcoin. People talking about buying and selling Bitcoin. But the only problem was that in terms of the practical applications of this technology, it was still not very practical because it wasn't like people were using it in terms of the utility of buying and sending money or just using it on its own. It was more of a speculation because the price kept going up and people kept buying Bitcoin. So the price kept going up until it didn't. So it hit an all-time high of almost $70,000, showcasing the explosive growth potential of cryptocurrencies and drawing significant global attention. So a lot of apps were made, a lot of developers started getting interested in cryptocurrencies, and it was a very interesting time. Now, an interesting mechanism that is built into Bitcoin is something called halving. So it's something that happens approximately every 4 years. So the last one happened in 2020, but there's one that is likely to happen this year in April 2024, in about 100 days from now. And the interesting thing about these halving events is that they lead to price increases due to the reduced supply rate. So I'm going to talk about how Bitcoin has been performing in the last year or so, but this is something to pay attention to because if you're interested in Bitcoin and you would like to take advantage of the opportunity, there's a halving event happening in 100 days, essentially. So there's also something that popped up during that era of 2019 to 2021, which is Ethereum. So Ethereum emerged as a powerhouse of DeFi and NFTs with its smart contract functionality, enabling a plethora of new applications. This period marked a shift in crypto use cases from mere currency to platforms for complex decentralized applications. So this is when you started hearing about things like decentralized applications, because before then, all you knew about crypto was that crypto was about money or Bitcoin, because Bitcoin was essentially synonymous with crypto at the time. But this new platform called Ethereum, which was in some ways inspired by Bitcoin itself, wanted to do something different with this technology and not just use it for cryptocurrencies, but kind of use it as a platform where you can develop and deploy applications. For Ethereum specifically, they use a programming language called Solidity. And it's not very difficult to create your own smart contracts, especially using technology like ChatGPT. It's possible for you to do that. Um, so, um, yeah, so Ethereum emerged, and with Ethereum came things like all these decentralized applications, but also NFTs. I'm sure you heard about NFTs. These are crazy pictures that people are buying and selling online. JPEGs and PNGs of monkeys, of weird characters, of artists trying to make money. That all of that was being done, and a lot of it was essentially founded or done on Ethereum, where you buy a bit of Ether, which is the currency that is attached to Ethereum essentially, and then you can use this Ether to engage with NFTs or even trade it into other cryptocurrencies, so you can do other things with it. But yeah, that's when Ethereum came along. But then those were the good days, the golden the golden era of crypto. But with the high and also with other things like the stock market and other things with the economy, with the pandemic and stuff like that as well, and the effects of that, the total cryptocurrency market saw a staggering 64% decrease from its previous peak, indicating a massive contraction in market value. Yeah, so a lot of stuff was going on at the time. People just started realizing that, oh, maybe these cryptos are not as valuable as we think. There were also a lot of things which are called rug pulls, which means that there were a lot of people who are setting up cryptocurrencies, promising the public that this cryptocurrency would change the world, And then as soon as you buy and as soon as you get into the cryptocurrencies, essentially as soon as you buy it, its price collapses to zero, meaning you end up losing a lot of your money. But the people who are actually running the cryptocurrency end up making money off of you, essentially. So a lot of crypto Ponzi schemes started popping up. A lot of illegal stuff, a lot of shady stuff started popping up in cryptocurrencies. And also the economy at the time, the market, stuff like that happened. Uh, the DeFi market cap plummeted by 72.9%, with governance and utility tokens losing over 48.4 billion in value, highlighting the sector's volatility. So yeah, people essentially really stopped interacting with these technologies. There was an NFT market crash where NFT trading volumes nosedived by 93.1%. Um, this reflected a significant loss of interest and investment in the NFT space. So NFTs that are worth thousands of dollars eventually became worth hundreds or even tens of dollars. And there was also a major event that happened in 2022, which is the fall of FTX. Was this in 2022 or 2021? So FTX collapsed. It was valued at 32 billion. And the thing about FTX is at the time, if you wanted to enter the crypto space, FTX was the easiest way for you to enter. It's also something I used to talk about back then because I enjoyed their service and I used to use their service. I just had no idea that they were, it was a whole Ponzi scheme in the back. But it was the easiest way for you to get into crypto. And even right now, if you're interested in getting into crypto in general, how you usually access crypto is through an app. So you just go to the App Store or the Play Store and you find an app from a cryptocurrency exchange like Binance or Coinbase. And if you can access, or there's even ways to access crypto with M-Pesa. But the idea is you download FTX, and then once you get onto FTX, you can now take money from your bank account or your credit card, or you can convert your Bitcoin and send it into your FTX wallet. And once you have some funds stored up in FTX, you can now use it to buy things like other cryptos. But the other interesting thing, it also lets you buy things like tokenized stocks and also NFTs. So the beauty with with FTX and some of these apps, essentially in general, these exchange apps, is that you can access a wide variety of different assets. So when I mentioned tokenized stocks, I meant that you can actually now invest in things like Tesla. You can invest in Apple. You can invest in public companies in the US that otherwise you would not have had access to. But now you're like a global investor, so it means you can actually start investing in some of these companies. You can also invest in the cryptos and the NFTs, and you can also invest in things like the S&P 500. So if you want, a solid investment in general, and if you want to get access to that, to the S&P 500, which is the list of the 500 most valuable companies in the US market, then you can get access to it essentially through this form of tokenized stocks, which makes it very, very convenient. So FTX collapsed because the founder Sam Bankman-Fried and his team were doing some very shady things, and essentially the money that you deposit as an FTX customer was being siphoned off into another company called Alameda Research, and they were essentially using customer deposits to fund their lavish lifestyles and make risky investments, which they lost a lot of money on. And now some Bankman-Fried has recently been sentenced to prison. So yeah, so that led to a lot of what's the word, like disappointment in everyone, including myself, and people just decided to back off crypto because you feel like it was very speculative. People were getting very greedy, and a lot of people were getting into it without understanding what the hell was happening. And the idea that a lot of people gave so much leverage to this one Sam Bankman-Fried highlighted, the nature of the industry, and people weren't really doing their research. So that meant that the prices really went down. The prices really collapsed. So and people lost interest, and the winter started deepening. So the exchange dynamics, now with the fall of FTX was the most popular exchange at the time. But then Binance and Coinbase, Binance was actually related to the fall of FTX in an interesting way. But Binance ended up becoming now the dominant exchange. So it now became number one. Although Binance is also something that you should be very aware of as an investor because it has its own issues. You should definitely look them up. And yeah, they recently also got fined a lot of money for doing very shady things. And then there's also Coinbase. Those ones became now more pronounced, highlighting the central role such platforms play in the crypto ecosystem. And then also there was increased regulatory scrutiny. So especially in the US, the government started really trying to crack down on some of these scams, some of these things that are happening. And a lot of the scams are possible because the government still had not defined what crypto is and isn't. Is it a security? Is it this kind of asset? Is it that kind of asset? Is it under this kind of protection? Does it fall under the normal bank protections and things like that? People were still figuring those out. And I remember even during the crypto boom, a lot of governments were trying to, first of all, they were trying to ban crypto. So that was something that came up. But then when they realized that they could not, they started setting up something called a CBDC, a central CBDC, meaning, yeah, a central bank digital currency. So it's essentially they're trying to set up their own version of crypto, essentially monitored by the government, which no one wants. So it just shows that they were interested in crypto. It's just they couldn't do anything about it. They tried to set up their own crypto, but now they started setting up regulations, essentially trying to regulate the market so that consumers are protected. So if you buy your crypto or if you put your crypto into an app, maybe legally you're protected in some way. Although it's still all gambling as far as I'm concerned. So okay, so now let's talk about signs of hope. So it was very depressing, and at that time it was called the crypto winter, meaning that everything was ice cold and the prices were very low. Now, if you listen to Warren Buffett or other savvy investors, you know that when the prices are low and people are depressed and no one is buying Bitcoin, that's when you should probably be buying as much Bitcoin as you can, because there have been starting to become some signs of hope. So Bitcoin experienced an over 65% increase in value since January of 2023, indicating a possible end to the crypto winter and restoring investor confidence. So the price of Bitcoin has slowly gone up. It was really high, then it came down, and then it started going up. And also Ethereum generated 16.8 billion in fees, with over 60% of this converting into revenue, proving its robustness and utility beyond mere speculation. That's the other question about these cryptocurrencies. Are they actually valuable, or are they just technology that is nice to look at but no one really uses? And it shows here that Ethereum is actually generating a significant amount of revenue. Now let's talk about let me show you the graphs here so you can see for yourselves how the price of Bitcoin has changed since this whole story that we're talking about. So Bitcoin was launched, and then there was an initial buzz around 2017, 2018. Then that died down. And then this is the one we're talking about here, which is the mainstream crypto boom, at least the first one that we can think of, that we can see. But the important thing here to pay attention to is that this was the crypto winter in terms of the graph going down and the price going from essentially, what's this? Let me say USD. So the price going from essentially 65K to around 16K, 16K at the very bottom. But then recently it started to go up. So the price has gone up to from 65K, it went down to 16, 17K, and then it's gone up to almost 50K. So Bitcoin is definitely on the rise. And the other important thing to pay attention to, especially about Bitcoin, is that there is something about to happen in the Bitcoin world called a Bitcoin halving. So I don't know if I've spoken about this, but the idea with the Bitcoin halving is that the rewards that you get as a Bitcoin miner, the person who uses all the computation to to essentially prove work on the chain, is going to be able to get only half of what they used to get. The fact that the last halving was in 2020, but now there is another one happening this year. And when that happens, the price of Bitcoin could go even higher. So just because there was a crypto boom and bust does not mean that it's not going to happen again. And if you want to participate, it is not a bad time. So the anticipated halving event between March and May, probably in April 2024, is expected to create a bullish sentiment in the market, historically leading to price increases. So yeah, and then there's also another aspect, deeper engagement, developer engagement. About 30,000 developers contributing to crypto projects in 2023, despite the market down, signifies ongoing innovation and commitment in the crypto space. So that's another thing to pay attention to, that developers are still, developing and contributing their IP and their hard-earned time into the crypto industry. There's also an active addresses surge. So the crypto domain saw its monthly active addresses hit an all-time high of 15 million, doubling over 2 years and indicating a growing user base. So that shows that, going forward in 2024, Bitcoin and probably Ethereum and also Wildcoin, which is something I should probably have a whole episode just talking about Wildcoin. Those are the three I think you should probably pay attention to, and those are the ones I'm going to be paying attention to because they have genuine utility. Bitcoin has genuine utility as a store of value. And it's not the quickest to send and receive, but just as something that stores value and also the fast cryptocurrency. It has its own value. Ethereum now also has its value because you can now use it to build applications on top of it and also as a currency and all of that stuff. And then now Wildcoin comes in as something valuable with its utility because it provides a form of universal basic income or a form of wealth distribution, a form of essentially verifying that you're a human being and not an AI. And also it's also a financial system on its own. So this is all about market resilience and adapting to change. The resilience shown by the crypto markets during and after the downturn illustrates its capacity to adapt to challenges and evolve, reflecting a maturing market that holds potential for innovation and growth despite inherent volatility. Yeah, the crypto it actually shows that the crypto industry can bounce back. So although it goes down and everyone is like, oh, crypto was just a fad, it can actually bounce back and prove itself, and which is very good. The other thing I want to talk about when it comes to Bitcoin is something called a Bitcoin ETF. This is a new thing that's coming up. And what is a Bitcoin ETF? So, a Bitcoin ETF or exchange traded funds are a significant development in the world of cryptocurrency, bridging the gap between traditional finance and the emerging crypto market. So, what is a Bitcoin ETF? So, a Bitcoin ETF is a type of investment fund that tracks the price of Bitcoin and is traded on traditional stock exchanges. It allows investors to invest in Bitcoin without actually owning the cryptocurrency itself. So the reason why this is a big deal is because if you look at the investment space, there's usually the traditional kind of investments or like stock exchanges if you want to go buy stocks of different companies. But then something new that has happened is now you can also buy cryptocurrencies. There are stocks, there are bonds, there's other types of assets, but then there's also now cryptocurrencies. Now, the interesting thing with an ETF is it allows you to invest through the traditional stock exchange mechanism into Bitcoin and crypto and probably other cryptocurrencies if the Bitcoin ETF was possible. So, like traditional ETFs, a Bitcoin ETF holds assets, in this case, Bitcoin, and divides ownership of those assets into shares. These shares are then traded on stock exchanges. By investing in a Bitcoin ETF, investors can buy and sell shares through traditional brokerage accounts without needing to deal with the complexities of cryptocurrency exchanges, digital wallets, and private keys. Yeah, so you don't have to go into the crypto exchange anymore. You don't have to know what Binance is. You don't have to like go have your own key. You don't have to have your own wallet, but you can essentially buy quote unquote Bitcoin and profit from whatever is happening. So they represent a significant step towards integrating cryptocurrencies into the mainstream financial system. Bitcoin ETFs make it easier for a broader audience, especially those familiar with traditional investing, to gain exposure to Bitcoin. But ETFs are subject to regulatory oversight, and then it can provide a layer of security and legitimacy that direct cryptocurrency investments lack. This means you're not just literally holding your own crypto in your own wallet. Yeah, like you are also protected in the same way that you would be protected if you're buying shares of Apple or Tesla or anything else. It makes them attractive to risk-averse investors and institutions, and it could actually take the price of Bitcoin. I think I'll talk about that and make it more stable. So the introduction of Bitcoin ETFs can lead to increased liquidity, meaning meaning the total market volume of Bitcoin could increase, and it can potentially stabilize Bitcoin's price by reducing market volatility. That's one of the things that Bitcoin is like one of the downsides of cryptocurrencies, because you can buy it right now and then a couple of days later the price really goes down. And that's because there's not enough people and enough volume of transactions going through the system for the price to not be that volatile. It's getting better over time as more people join, but with something like an ETF, it could stabilize the price by reducing this volatility and also serve as an endorsement of Bitcoin's potential as an investable asset class. So I just wanted to talk a bit about this idea of ETFs. When it's approved, it could be a big deal. And as of April 2023, several countries had launched some Bitcoin ETFs, and there are some ongoing discussions about such funds in the US. So it's a groundbreaking development in the crypto space, offering a regulated, easier to access means for investing in Bitcoin and hopefully other cryptos, showing that cryptocurrencies are about to become even more mainstream, even more accessible in different ways that we had not considered. So I just wanted to talk about this kind of update so that you're aware. Things are still moving in the crypto space: Ethereum, Bitcoin, and Wildcoin through the Wild app. If you want to buy crypto, by the way, that's one app you can try. The Wild app. You can first of all you'll get access to Wildcoin, but then you also have Bitcoin and Ethereum there that you can buy. So thank you so much for listening, and I will see you in the next one. Bye bye.